Right, time now for our In Focus segment in which we are discussing about India gets an international bullion exchange. I repeat, India gets an international bullion exchange, and joining me are two very special guests. Injeti Srinivas, Chairperson, International Financial Services Centres Authority, and Maulik Kothari, Head of Marketing, India International Bullion Exchange or IIBX. Gentlemen, welcome to News Night. Mr. Kothari, if I can start with you. First of all, congratulations for the launch of the IIBX in Gift City in Gujarat. But some people are already calling it a game changer. Why is the IIBX a big deal, Mr. Kothari?
To participate in this discussion. Yeah, it's been a momentous day for us, a moment of proud for India International Bullion Exchange. Now that we have been officially launched by the Honorable Prime Minister today. This is our endeavor to see our country as being a prize influencer. And not just being a prize, taker all over the years that we have been. To have India, to get India its rightful place in the global bullion business and the global bullion industry. So an extremely momentous day for us, and we are thankful to our regulators, IFSCA, for their support and guidance in reaching this milestone today.
Mr. Srinivas, coming to you now, what is the IFSCA's role in all of this? Where does the authority fit into the scheme of things?
Thank you for having me on your show.
Welcome.
Mr. Ramesh. You see, IFSCA perhaps is a unique regulator because the IFSCA Act mandates this regulator to engage intensively in both development and regulation of financial institutions, services and products. So there is a huge development role. If I may quote the Honorable Prime Minister, he talked about the role of a catalyst. So I think we at the IFSC saw a huge opportunity. You see, India is the second largest consumer. Importing about 1,000 tons of bullion, gold, every year, and we are sitting on a above ground stock of 25,000 tons. With this sort of, and then there's a huge gold centric society. The society gold is very in all sacred events, gold has a role to play. So we need to really leverage this. So there are two things to it. One is spot exchange.
Right.
So why can't the jewelers and other consumers directly access gold from the exchange so that they can procure just in time? What really happens now in the consignment model is that the gold is brought in to the domestic tariff area by paying the customs duty, but typically for pricing the gold, it takes months and months. Ultimately, somebody has to pay the price for storage of gold, for the insurance, for the transport, etc. So this is one advantage. The other advantage is that we are sitting on 25,000 tons of gold. If it's like a dead asset. Of course, government from time to time has come up with gold monetization scheme, the sovereign gold bond scheme, and other initiatives. But the amount of gold getting converted or recycled into bullion is still very limited. Now, when you have this exchange, you have a golden opportunity. Maybe we can put a limit of, say, for instance, 50 tons. You can start a smaller you can allow 50 tons per annum. And the Indian gold good delivery standards can also be made a globally accepted. So, and lastly, what happens is, today, if you have, let us say, a discount situation in Hong Kong, and you have a premium situation in India because some festivals are going on, the Hong Kong guys would like to access the Indian market and supply gold at a price little better than what they are getting in Hong Kong or in other exchanges.
Okay.
And the Indian buyer can also benefit. So it's a win-win situation. You see, the arbitrage can be captured by both the buyer and the supplier. Lastly, trading in gold. So when you go, it has to be stages. One is that it's a trade liberalization measure. Then you have futures, and then you have financialization of gold.
Right.
You can make gold an investment product. With that investment which is coming, the banks can give gold loans. So there are numerous opportunities. It's only a question of sequencing them and in a calibrated manner unfolding. That is why perhaps it is called a game changer.
Mr. Kothari and Mr. Srinivas, I want the viewers to gain a better appreciation of the issues at hand here, so that they can leave this discussion with a better understanding of the intricacies of the issues as well. Mr. Kothari, first and foremost, if you could answer one frequently asked question for our viewers: who can import gold or trade in gold or silver at the bullion exchange? Mr. Kothari?
Yes, so there are some prescribing norms for an Indian jeweler. If you satisfy those norms, then you can get onboarded with IIBX and directly import gold into the country. Now the norm specifies a few conditions, like your net worth being minimum 25 crores, an average annual turnover in the last 3 financial years being 90% more in more than 90% in precious metals. Your GST being filed into some GST codes like 7108, 7113, 7114, 7118. You being satisfying the fit and proper criteria. So once an Indian jeweler satisfies these prescribed norms, the Indian jeweler will get onboarded with IIBX and then can start importing the gold directly into the country, offering him an alternate channel through IIBX to import the gold.
Srinivas, let me come to another important question that people are often asking, especially today in the light of the launch of this bullion exchange. What was the process until today, and what does the fact of a bullion exchange becoming a reality today give a benefit in terms of benefit for either corporates or individuals going forward?
So I would put it this way: at present, it is an additional sort of option.
Okay.
It's not mandated. It's not that from today onwards, whoever wants to import gold has to necessarily import it from the bullion exchange. There are 2 options. One option which has been there is the consignment route. That means there are nominated banks and agencies. It is like a canalizing agency who bring in gold, and then you buy the gold from that intermediary. The intermediary could be a trade house or a bank.
Okay.
Today, the jeweler, if the jeweler sees merit in buying directly, the jeweler, provided the jeweler meets the eligibility criteria, will be able to access directly. So market forces will determine ultimately which will be the preferred route. My own take would be that in due course, this would certainly emerge as a preferred route, because one, you are disintermediating, one intermediary is going. Second, there is a transparent price discovery.
Mr. Kothari, you described the launch of the exchange as as one in terms of being able to set the price, not just be influenced by it. In that context, I want to recall what the PM said in his speech this afternoon, this evening. He says India should not be identified just as a market; it should actually become a market maker. In other words, India should be, as you said, the influencer of bullion prices going forward, and not just a recipient of the prices fixed by the world market, so to speak. Is India poised now with the launch of this exchange to become a hub of sorts in bullion?
Yeah, certainly. That is what our endeavor is, to have India its rightful place of being a price influencer, right? So, so till now, we all know that gold is an international commodity, being quoted into global locations like London and New York. And till now, an Indian jeweler or an Indian consumer used to look up to those prices and determine what exactly the value he or she needs to pay. Now with the launch of IIBX, those prices can be seen transparently by himself or herself, and determine whether at what rate they would want to import. So this puts our country in its right place to be a price influencer, rather historically being a price taker, and that's what our endeavor has been.
Indeed. Mr. Srinivas, the PM also launched the headquarters of the IFSCA.
Ramesh, if you permit me, I'd just
Sure.
like to add
Sure,
that
go ahead.
it's a two-way process. So only importation of gold will not make you a price influencer. We should also be allowed to export recycled refined bars. When there is a discount in India and premium outside, you can with a small margin also make a good profit margin. So it should be a two-way process. It is
Okay.
only then to start influencing price. So as I mentioned, as you liberalize the trade, this is going to happen.
Fair enough. Point taken there, Mr. Srinivas. Again, on the point of the launch of the headquarters of the IFSCA, how did that come about, and why is it significant in your estimation, Mr. Srinivas?
See, I'll tell you. I mean, when you, in your news channels, you show something in capital market, then SEBI building is symbolic. Okay. So these buildings become, iconic. They become symbolic. So because this is emerging as an international financial center, the first international financial center in the country, because there is full convertibility in this zone, which is not existing in the domestic area. So it is like something which is inspiring and iconic and a very, very state-of-the-art building, which will also promote that culture, that work culture, and you match your performance with the elegance of this iconic structure. So I would not say more. I think it's something which is very inspiring, and really very happy that it is seen as a symbol of India's progress, and IFSC emerges as the second engine of growth for India. The primary engine will always be in the domestic economy, but taking advantage of the hinterland, this could emerge as a second engine of growth.
Right. Let me also ask you, Mr. Srinivas, about the collaboration, the joint project between NSE and Singapore Exchange. How crucial is that, and what's in store for the consumers, the end users, from their perspective?
I think this is a very defining moment. There may be many naysayers who may be criticizing or whatever, but let me tell you, this is a very, very, excellent template for a connect between two exchanges. Singapore has established itself as a global exchange.
Right.
So by connecting with them, you are giving access to global investors. Many investors may be feeling very comfortable having interface with Singapore Global Exchange at this point in time.
Right.
So they'll be very happy, even if at the back end the settlement is being done. The order book is in the NSE IFSC. Gradually, you will start gaining confidence in the NSE IFSC also. What has Singapore to gain from it? Singapore gets access, a very special access to the capital market of India. You have, here it's the omnibus accounts you maintain. Typically, if you want to come through the domestic route, you have a segregated system. So there are some tax incentives, there are some procedural, simple procedures which will be very attractive. So it is not that those who are comfortable coming to the domestic route have to migrate here, but those who are still on the fence, they will feel very encouraged to access this. So it is a win-win situation. Today it is Nifty 50. Tomorrow it could be currency derivatives.
Right.
Day after tomorrow it could be something else. So it's a good model to replicate with other offshore jurisdictions as well.
Right. Mr. Kothari, coming to you now, let's talk a bit more in detail about the exchange itself. Could you demystify the processes involved in physically storing the ingots or the coins or other gold bars and silver bars in the exchange, number one? And number two, is there anything at all for an individual vis-a-vis a corporate who might want to enter this particular domain of trading in bullion?
So we have a sequel, which is an existing gold which has been authorized into IFSC.
Okay.
which is operational and which would facilitate the vaulting facilities inside GIFT IFSC. We also have Brinks and Malka Amit, which are in the process of getting the requisite approvals, and these are for all means world-class vaulting facility providers for global bullion banks and traders to offer their metal supplies into GIFT IFSC. So those vaults would facilitate the physical metal being vaulted into GIFT IFSC, which would then get transferred into a bullion depository receipt, which is easily been tradable and can be in dematerialized form, which once an Indian qualified jeweler would do a transaction through IIBX platform, the same BDR receipts gets credited into his demat account. So this is how the entire setup is being planned.
Right, on that note, may I thank both my guests, Mr. Maulik Kothari and Mr. Injyati Srinivas, for sharing your insights with our viewers in India and abroad. Thank you, appreciate it. Right, and moving on to some more stories we are tracking here on News 9. It was a once in a lifetime occasion for